Are you a first-time home buyer or somebody who's in the housing market, hoping, wishing, praying for mortgage interest rates to go down? In today's video, I'm going to tell you why the last thing you want in today's real estate environment is for mortgage interest rates to go down. All right, Matt, the Mortgage Guy, residential mortgage broker, licensed in 46 states. Today's video, like a lot of videos, is born out of good conversation. So quick shout out to my buddy Connor Wilson. If you want to get a loan in Texas or Florida or Tennessee or one of the 10 states he's licensed in, feel free to go to greatmortgagebroker.com, fill out the form. Me and my team are happy to help out, and Connor's more than happy to help out, especially if you're in Texas, Florida, or Tennessee, states where we do a lot of business. Having a conversation today where we talked about mortgage interest rates and everybody's, kind of hope that mortgage rates will go down. The topic quickly turned to today's real estate market really can't handle lower mortgage rates. Now, let me explain. I too understand affordability is an issue. I too, since I work with hundreds, thousands of buyers, and I'm on the buy side of real estate, so I'm rooting for you guys, trust me. But I also understand supply and demand. Many markets, not just Sacramento, California, where I'm based and where we do a lot of business, but all over the country, there is anemic amounts of supply. Anemic, for those of you who had to learn that word like I did because public school, means not a lot. There's not a lot of listings out there, not a lot of homes for sale. And so when you decrease mortgage interest rates, which increases demand, you get a housing market that's very unhealthy, savagely unhealthy, my buddy Logan would say. And so while we do want over time mortgage interest rates to come down, for current folks who are locking their rates in the sixes, and for future folks for affordability, the market currently just can't take it. We need some things to happen on the supply side first, or else we're in for a tougher market than we're already in. And I'm going to show you some stats behind exactly how crazy this market is. I'll show you Sacramento stats, but know that I talk to Connor, other colleagues, real estate agents across the country. I talk to a lot of people, and a lot of markets are behaving like Sacramento, California, home of the Sacramento Kings, 2-0 against the Golden State Warriors. That's a whole nother video. That's probably for the Get Better Everyday podcast. But let me show you this before I get too sidetracked with those beautiful Sacramento Kings. Sacramento region, all prices. One way to look at how competitive a market is, and how fast things are going, is to look at actives, which is the home is on the market, it's for sale, versus pendings. When there's more homes pending than there is active homes for sale, that tells you that when homes become active, they go pending really fast. And so things are moving fast. It's a competitive market. The bigger that imbalance, the more competitive it is. Currently, if you look at the top, Sacramento County has 806 actives and 1,048 pendings. So the pendings outweigh the actives, and so things are moving relatively fast. When you go down and you look at under 500,000, and shout out to my buddy Ryan Lundquist, SacramentoAppraisalBlog.com. This is where I pulled this graphic. I would even tell him, you could look at under 600 likely and still see a big imbalance, even if you looked under 700, because my guess is that, a good chunk of these actives are stuff at $1 million plus that just been sitting for a long time. These are stats as of 4/18/2023. I know last week, when he pulled this report, there was 187 active and 503 pending under 500K. So actually, we got a little bit more inventory. That's good. 221 are active, and 494 are pending. So, the pendings go away once they're sold and that's done. But if the market's moving fast and things are selling quickly, that pending number keeps increasing and the active number comes down. So this is a look into how competitive the market is, especially under 500,000. So if you're a first-time home buyer, and this could be in any market, you can think to yourself, if mortgage interest rates come down, what's that going to save me on a monthly basis? And while that might save you a couple $100 on a mortgage payment, if it means you pay an extra 10% because there's so much demand, and really current numbers that you see for Sacramento, under 500,000, things are going 30, 40, 50,000 above list. Appraisals are having to be waived. Loan contingencies in some cases waived. It's competitive. And you can't have the best of both worlds. You can't have lower mortgage interest rates and the same prices that you'd have if interest rates were higher. And so, as much as it seems counterintuitive, don't necessarily hope for lower mortgage interest rates. If you're in the market to buy, here's my best advice. And always, I'm not trying to sell anybody anything. If you're not ready to buy, or you don't think it's a good time to buy, more power to you. All good. I know, along with thousands of investors that I've worked with, and the millions of people that have accumulated massive wealth through real estate, that if your intention is to hold real estate for the long term, you don't time it. It's not a rates are this, prices are this, this is when I buy, right? It's more aligned with where you're at individually. So with that in mind, if you're in a position right now where you've got 5% down payment saved, you got some extra emergency fund there, your credit score is in a good place, your job is stable, hey, I want to buy something. You might go look in a neighborhood and buy something and say, you know what, like, ideally, I wouldn't be at a 5.99 or a 6.25 or a 6.5, depending on credit score, depending on down payment, depending on loan type, all those things, right? But the good news is you can, if rates go down in the future, refinance. What's going to happen to some people is they're going to refuse to buy because rates are higher. And if rates go down and demand gets injected into the market, they're going to be like, goody gumdrops, I can now get a 5.25. Well, the downside is you might pay 10% more for the house, or you might not get a house at all because it's so gosh darn competitive. Already with rates where they're at, in the low sixes for a lot of my clients, there's 10, 12, 15 offers. I know people that have been offering on homes for quite some time. I know a specific client that thankfully we got into contract and we're closing relatively soon, that was shopping and looking at homes back in 2021. And that was a very competitive market. So much so that buyer just said, throw in the towel, and literally gave up and came back a couple of years later and said, it's tough, but it's a little bit easier than it was back then. In the game, got an offer accepted, going to close. So anyhow, that is my story and I'm sticking to it. Don't necessarily hope that interest rates come down, because the unintended consequences will be an influx of demand. I know it to be fact. You have rates come down below 5.5, demand is going to come chugging along. And in a market that's already relatively unhealthy when it comes to supply versus demand, you just don't want to inject more demand. I promise you that. Thanks for watching. If you enjoyed this video, there's other 800 and some odd videos. Some of them are probably better than this one too. So check it out here, and here. Thanks for watching.